Assalamu alaikum friends, how are you all? Hope you all are doing great. So welcome to taxation practice test 1. Okay, so today's paper we are going to do is taxation. Yesterday you saw that I did performance management and today I'm going to do taxation. Okay, so taxation, when you go click here, you will be seeing there are so many countries. So the taxation which we are going to do in this video is UK. Okay, I will not be covering the other countries because the tax which I have studied was UK tax, so I'm going to do UK tax. Okay, so when you go to the ACC official resources, the past exams, I'm going to select the first one, the practice test. I've already assigned it, right? So you have to assign that, and it's here as you can see. So I'm going to start the test. Okay, now the pattern for all the applied skills from F5, okay, from your performance management, your financial reporting, your taxation, your audit and assurance, and your financial management. Okay, F5 to F9, F5, F6, F7, F8, F9, these 5 papers, the pattern is same. Okay, the way the question is, the way they ask the question is the same, the pattern is same. 3 sections are there: section A, section B, section C. Section A, multiple choice questions. Okay, or you might have to type an answer, or you have to drag down from the list, or you have to click, okay, on the correct cell. This is the way you have to answer for all these 5 papers. Section B, you will be given a brief case study. One case study, on that you will be given 3-4 questions, and then 2 or 3 case studies, on that you will be given 4-5 questions. Okay, and section C, where you have to write, either you have to do calculations on Excel, or either you have to type using MS Word. Okay, it will be given to you whether you have to type or do Excel, so you don't have a choice. Okay, when it's working you'll be given Excel, when you have to type you'll be given the MS Word for all these 5 papers. Okay, the format is same for the first 4 papers, F1 to F4. Okay, that is your business and technology, your management accounting, your financial accounting, and your corporate and business law. We have 2 sections, section A and section B. Okay, there is multiple choice questions for section A. Section B, you'll be given a case study on that. Still you have to select. It's like a multiple choice questions, you don't have to write anything or do any working, unlike in the applied skills model. Next, okay, after the applied skills model comes your professional papers, your P level papers, but that I'm not going to touch now. That will be later after I complete all the applied skills paper, that is F5 to F9. Okay, so let us start with the taxation, and this is one of the, what do I say, easiest paper I would say, and the best paper. I just love tax, I can any day I can do tax. It's like, for those people who think tax is very complicated, and tax is not at all complicated. In fact, it is the easiest one to get good amount of marks. The older thing is you have to remember a lot of number and lot of dates and all. Okay, that's what it makes tax complicated, but otherwise tax is the easiest paper in the applied skills model, I would say. Okay, so starting with this, and all the papers are 2-hour papers, so I'm sorry, the from F5 to F9 is 3-hour paper, but before that F1 to F4 it is 2-hour paper. So starting with this, as you can see, this is about inheritance tax. Okay, so you have to know inheritance tax. Okay, so on 1st of July 2019, Samir made a cash gift of 2,500 to his sister. 1st May 2020, date is very important. Okay, it is given in a chronological order. He made a cash gift of 2,000 to a friend. 1st of June 2020, he made a cash gift. So all these are cash gift made to different person. First to his sister, then to friend, then to trust. And he had made no other lifetime gifts. So in respect of Samir's cash gift of 50,000 to our trust, what is the lifetime transfer of value for inheritance tax purpose after taking account of all available exemptions? Okay, you should know the exemptions. You'll be learning this in tax. For the ones who have seen this video for the first time and who does not know what is this exemptions and all, there are exemptions or every tax. Okay, whether it is capital gain tax or inheritance tax or income tax or right, corporation tax, we have exemptions in every tax, and you have to know the exemptions. Okay, so what are the exemptions? What are the exemptions? From 50,000. Okay, He made a cash gift of 50,000 to the trust in respect of the cash gift of 50,000. This 50,000. What is that? Lifetime transfer of value. So from this 50,000, you have to deduct exemptions. Okay. So what is the first exemption you have to deduct? What would be the first exemption? It would be the annual exemption. Okay. So the annual exemption, we know. What is the annual exemption? How much is the annual exemption? The reason I'm going slow is I want to explain the little bit of inheritance tax also. Okay. So annual exemption is 3,000. But can we deduct the full 3,000 in this case from 50,000? No, we cannot. Why? If you're saying no, why? We can only use 1,000. Out of the 3,000, 2,000 has been utilized as PET. Okay, PAT. Just 2,000. Okay. It's within a 1 month. Okay. And also to a friend. So it is counted as PAT. Okay. So from 3,000, 2,000 is taken away. So you're only left with 1,000. Okay. Next, even you have an annual exemption for 2019-20. This annual exemption for 2020-21. This 2,000. For 19-20, this will be deducted from 3,000. Okay, there are two annual exemptions because there are two different years. One is for 2020-21, the other one is 2019-20. Okay, from there, 3,000 you will be deducting this 2,500. So you will be left with 500 in this year and 1,000. So that means overall you are deducting 1,500 from 50,000. So which will lead to 48,500. Okay. Next. What is it? Months. So this is about your private residence relief, your PRR. Okay, so on 31st March here, you have to go a bit slow. You cannot, you have to count, okay? Starting from the beginning. You have to know what are the exemptions and all. So on 31st March 2021, Angus sold a house which he had bought on 31st March 2007. Okay. Exactly how many years? 14 years back. Okay. Same date. Exactly 14 years back. Okay. Angus occupied the house as a main residence until 31st March 2012. That means for 5 years he was there in that house. When he left for employment abroad, Angus returned to UK on 1st April 2014 and lived in the house until 31st March 2015 when he bought a flat in a neighboring town which became his main residence. What is Angus' total number of qualifying months of occupation for private residence relief on the sale of the house? You know that when there's a private residence, we have some exemptions for that. Okay. So when we are occupying that house or there are some exemptions are there, we are taking it, we can claim for the exemptions. So what is it? How do you count? First, what is the actual occupation? Start with the actual occupation. What is the actual occupation? He bought the house on 31st March 2007 and he stayed until 31st March 2012. That means exactly 5 years. So 5 years means 5 into 12, 60 months. Okay. Plus. Okay. So 60 plus. He returned on 1st of April 2014 and lived in the house until 31st March 2015. Another 1 year he stayed from 2014 to 2015. So 12 months. So 60 plus 12, 72 months is actual occupation. Next, when you are employed abroad, okay, so at least the first 3 years you can claim, okay, until 3 years. So let us see for how many years. He left on 31st March 2012 and he came back 2014. That means 2 years. Okay, from 13. 1st of April 2012 to 31st March 2014. That means 2 years he stayed abroad. Okay, employed abroad, not just stayed abroad, employed abroad. So 2 months it will be counted. So 2 into 12, that means 24 months. So 72 plus 24 plus the last 9 months of ownership. So here, what is it? When he bought a flat in Navy, which became his main residence. So you will be getting the last 9 months of ownership. Okay. So 72 plus 24 plus 9, 105. Okay. It is 105 months. Next. Aberna has made the following gross contribution to her personal pension scheme over the past 3 tax years. Okay. So this is about gross contribution, pension schemes and all. What is the maximum gross contribution which Aberna can make to her personal pension scheme for the tax year 2020-21 without giving rise to an annual allowance charge? Do you know what is an annual allowance charge? It is 40,000. Okay. So let us go. So 40,000 is the annual allowance charge. If you see 2017-18 for the 3 years. Okay, here up to 40,000 is the maximum. Okay, here they are saying 42,000, but you can only make up to 40,000. So we are counting, we are adding 40,000 from 2017-18 plus Z. Okay, so 40,000 is the annual allowance plus 0. 2017-18 you cannot take any, it will be 0. Okay, because you have exceeded 40,000, so it will be 0. Here 2018-19 13,000 because 40,000 minus 27,000, the balance, you didn't utilize the full 40,000 annual allowance, so 13,000, and from here you didn't utilize it full 12,000 you can take. So when you add, it will be 65,000. 40,000 plus 13,000 plus 12,000. Okay, this 40,000 which you used is the current year. Okay, 2020-21 you didn't utilize any. That year's allowance we are taking first. And how do you start working? You start working from the earliest year first. Okay, from 2017-18, then 18-19, then 19-20. It's not backward. You are going from in a chronological order. First you are utilizing the current year's allowance. Okay, because you can utilize when you haven't used the annual allowance, the 40,000 in full for past 3 years, you can carry it forward. Okay, that's why you are adding it with this year's allowance. Next, so this is about VAT. Okay, Triangle Limited is a registered for VAT and uses the annual accounting scheme. For the year ended 31st December 2020, net VAT payable is this much, and 2019 this is the VAT payment. So you have to click on the relevant boxes. Okay, and what is the number of the monthly payments and the monthly payment amount. So this payment must be made in respect of the year ended 31st December 2020 prior to submitting its VAT return for that year before the VAT payment. Okay, so what is it? So number of monthly payments, is it 9 or 10? There will be 9 monthly payments. And monthly payment amount, what is the monthly payment amount? You have to calculate. So how do you calculate? Take the calculator out, and so it is 47,700, right? So it is 47,700 700 okay. You have to divide this by 9 because 9 installments, 9 monthly payments you are making, and multiply this by what percentage? 90 percentage, because you are making 10% monthly payments. So it is 4770. Okay. Next. So this is about some pre-trading expenditure. Okay. Lily Limited commenced trading on 1st of January 2020. The company incurred the following expenditure prior to 1st of January 2020. Okay. What is the amount of Lily's deductible pre-trading expenditure in respect of the year ended 31st December 2020? So here you have to write, here you don't have an option. So how do you calculate it? So you have to know what you can deduct and what you cannot deduct. Okay. So Lily can deduct the research into competitors incurred on 6th June, this one. This 12,000 can be deducted. And the donation to the local school, this 2,000. You have to know what are the deductions. Okay. This is based on that I'm saying. So if you're asking me why this and this, you have to go through that. What are the deductible pre-dating expenditure? You have to go through that list. Okay, there's a list. So first you can deduct this, then you can deduct this. Total 14,000 can be deducted. Okay, so the amount is, the question asked deductible pre-dating expenditure. Okay, so initial market research and entertaining customers and supply, they are not deductible pre-dating expenditure. You cannot deduct it. Okay, so 14,000. Okay, why you cannot deduct initial market research? Because it was incurred more than 7 years before the commencement of trade. If you see the date, the commencement of date is 1st Jan 2020, and this is on 2012. More than 7 years. So something which is more than 7 years before the commencement date, you cannot take it as a deductible expenditure. That's why you cannot take initial market research. Okay. Now you can take the entertaining cost, as it is a non-staff entertaining. It is not allowed. Non-staff entertaining itself is not allowed. It's not because of the date, but this one is not allowed as a deductible expenditure. So that's why this two you cannot take. Next. Paloma has been trading for a number of years. Her tax adjusted trading profit for the year ended 31st May 2020 was this much, and the year ended 31st May was this much. What was the amount of the class 4 NIC payable by Paloma for the tax year 2020-21? NIC also will come. Remember the 4 classes. Class 1 we have class 1, class 1A. Then we have class 2, then we have class 4, class 3 and class 4. Okay, we have 4 classes. You have to know all the classes. So class 4 is for whom? It is for self-employed people. Self-employed people. So how do you calculate it? Let me take the calculator out. Okay. So what was, you have to know the limit. There are limit, okay? Upper limit and lower limit, okay? So if you see first the upper limit, okay? So it will be 50,000. This is the upper limit minus 9,500 into what percentage? What is the percentage? It is 9%. Okay. If you're not understanding, you can even Google and check how class 4 NIC operates. Okay, go and check the percentages. With this, you have to add. Okay, you have to put bracket. $53,150, which is for 31st May 2000. Okay, 53,150 minus 50,000 because it exceeds the upper limit. into 2%. It is 3708. So it is this. Next. Identify by clicking on the relevant boxes in the table below which of the following statements are true. So you have been given inheritance, NIC, corporation tax and VAT. 4 different type of tax in one question. Okay, this shows that you have to study the whole syllabus overall. Okay. Next. So corporation tax is a direct tax on the turnover of the company. Is it? Nope, it's false. NIC is a direct tax suffered by employees and self-employed on earnings. Is it? Yes, it is true. We have different types of tax. NIC, right? Type 1, type 1A, type 2, type 4. Inheritance tax is a direct tax on transfer of income by individuals. Yep. You have to know what is a direct tax and indirect tax, okay? So VAT is a direct tax on supply of goods and services by businesses. No, because VAT is an indirect tax. It's not a direct tax. Okay. So let me explain you why. For NIC is a direct tax suffered by, which is true. Corporation tax is a tax on the profits of the company, not the turnover. Okay, it is not the turnover, it is on the profit of the company. Inheritance tax is a tax on the transfer of assets, not income. And VAT is an indirect tax, not direct tax. Next. Which of the following statements concerning self-assessment tax returns for individual is true? So you will also be learning what are the penalties of paying late tax or filing incorrect amount. Okay, how do you self-assess? Because remember, tax you do self-assessment. Okay, you already calculate your own tax where you have to pay. So what is it? Individuals with tax payable of less than 1,000 of a tax are not required to file a tax return. Individuals are only required to file a tax return for a tax if they receive a notice to deliver from HMRC. All individuals who submit a tax return at the time are able to have their tax payable calculated by HMRC. The tax return for an individual covers income tax class 1, class 2, class 4 NICs and capital gain tax liabilities. So this is the true statement. Okay. Next. In the certain circumstances an individual is automatically not resident in UK. Residency, there are residency rule you have to know. Okay, there's a table which will be giving you the number of days and all. I think it is there in the formula. Let me go and check. Okay, you can go to the tax table and see the formulas. So you have been given the income tax band, okay, the dividend rates and all. You have been given the personal allowance. Then you have been given, yes, exactly. So this one, the resident status, okay, you can check this. Okay, you have been given the child benefit, income tax, the car benefit. So all those things are there, okay. The pension scheme is there, approved mileage, capital allowance, cash basis, corporation tax, the VAT, the inheritance tax. Then we have the TAPA relief, the capital gain tax. So for NIC also we have these things, okay. The reason why we calculated that time NIC, okay. So you can see the rates here, 9% and 2% for class 4. Then we have the penalties. So these are some penalties for the error. So when you go to the help text table and when you go to the tax tables, all the formulas are there, you can see. Okay. So you have to click on the relevant boxes whether the following two individuals satisfy or do not satisfy the test to be treated as automatically not resident in UK. Automatically not a resident in UK, okay. Eric, who has never previously been resident in UK in the tax year, he was in the UK for 40 days. And Fran, who was a resident in UK for the two tax years before this tax year, she was in UK for 14 days. Okay. So does he satisfy or not? Eric satisfies. Eric satisfies. How? Because less than 46 days and not previously resident. He has not been resident and also less than 46 days, which is 40 days. So he satisfies. He's not a resident in UK. Let us go to this tax table and let us go to the resident formula. Okay. So here, not previously resident. Okay. So you can look at this table. He falls in this category, 16 to 45 days, because it is less than 40. Okay. So he is automatically not resident. Why? Because not previously resident. So automatically not resident. You can see from here. Even this table also you can use if you don't remember the table and all. Next, for friend, he does not satisfy the test. Why? Because he has been resident. If you see, he has been resident in UK during the previous 3 years. Okay, he said last 2 years, but that falls in the previous 3 years, and so he automatically not resident. So to be automatically not resident, she must be in UK for less than 16 days. Less than 16 days, but she has been 18 days. So she is a resident. Let us go to that table again and check. Okay, he has been previously resident, so you have to follow this column. And what is the number of days? 18 to 45. Okay, so here it falls in the second band, 16 to 45. So resident, if you 4 times or more, so he's a resident. Okay, resident. That's why he does not satisfy the test of not being resident. The question asks not resident in UK. Sometimes it's easy to get confused, and you might be thinking satisfy the test means he's resident in UK, does not satisfy means he's not resident. No, it's the other way around. You can even highlight in case you forget. Okay, so not resident, you can highlight it. Next, Max is employed by Star Limited on 6th April 2019. Star Limited provided Max with a camera for his personal use. The camera had a market value of 2000 on 6th April 2019. On 6th April 2020, Star gave the camera to Max for free. The camera had a market value of this. What is the Max taxable benefit in respect of the camera for the tax year 2020-21? Okay, drop down list. What will it be? Before you select an answer, okay, don't just select. Okay, here's no guessing work is required here. You have to understand. Either you understand the concept or you don't understand. Okay, you only have to guess the right answer when you're not able to reach to the correct answer after doing the workings and all. Okay, this is for any paper. Okay, so first, the market value when first made available. This is like first made available less the taxable benefit in respect of the private use. Okay, there's a rule for that. Okay, when you're making private use of an asset. So it was the 2000 minus 2000 into 20%. Okay, because private use you have to deduct from it. Okay, 20%, up to 20%. That's a rule. It's a fixed rule. Okay, don't ask me why 20%. For that you have to study taxation. So 20% into 2000, deduct 2000 from that. 2000, that means it will be, okay, let me show you the calculator. 2000 minus, because you are making a private use of an asset, so 20% will be deducted from that market value. Okay, the market value is 2000, so it's 1600. Now don't be in a hurry to click 1600. No, it's not over. It's not over. You have to compare this with something else. What is it? You have to compare this with the market value at the date of the transfer. You have to compare the two things. One is when it was first made available. Okay, then when it was transferred finally. So it was transferred and it was 1400. Whichever is higher you have to take as a taxable benefit. So 1600 is higher, right? Then 1400, so it is 1600. Next. So this is also an inheritance tax. Okay, it's relating to death. So Cora made a cash gift of 300,000 to her niece. Okay. She then made a cash gift of 500 to her nephew. The days are, it's 2 different years. Both of these amounts are stated after deducting available exemptions. Why this line is given here? That means you are not when it's not there, when this line is not given to you, you have to deduct. First, you have to deduct all the available exemptions. Okay, there could be annual exemption, there could be some other exemptions. Okay, so many exemptions are there. But the moment they're told that they have already deducted, you are not supposed to deduct any more exemptions. Khalas, it's over. And he died on 31st October 2020. Okay, this is not an answer, it was just clicked. Okay, so what amount of inheritance tax was payable as a result of the Cora's death in respect of the cash gift of 500,000 to her nephew? They are asking for one gift, 500,000 to her nephew. Okay, so we know, let us go to the inheritance tax again. If you go by inheritance tax, death rate is 40%. Okay, and nil rate ban, we have to take the care of nil rate ban of 325,000. Okay, so out of 325,000, 300,000 will be gone. Because why is that? Because this two falls on the same year. Okay, 30th April and 31st May. So first, on that year they'll be utilizing what? 325, that is the nil rate ban. 300,000 has been utilized from that nil rate ban. How much is remaining? 25,000. So out of this 500,000 you can deduct 25,000, which will be 190,000. On that 190,000, now you apply 40%. Okay, so when you apply 40% to 190, it is 114,000. Okay, next penalty and interest. Okay, Rajesh is a sole trader. He currently calculated his self-assessment payment on account for the tax year and paid on the due dates. Rajesh paid the correct balancing payment of 1,200 for the tax year on 30th June 2022. Indicate by clicking on the relevant box in the table below what penalty and interest he may be charged as a result of the late balancing payment for the tax year 2020-21. Okay, so penalty and interest. What will be the penalty and what will be the interest? You definitely have to do a working to find out. Okay, so for interest, he will be charged interest from what date to date. Date matters a lot in tax. Okay, you have to know interest will be charged from which date to which date. It will be charged from 1st of Feb 2022 to 30th June 2022. Why 1st of Feb 2022? Why from that date interest will be charged? Because you have to know when are you making the payment. When you are making the payment on account, what is the date you are making the payment on account? It is 31st March following the tax year. Okay, the first payment is 31st March following the tax year. So if you see this date, it is 2021. So that means it will be 31st Jan 2022. So that will be the first date. After that, when you're making a payment on account, it's delayed. Okay, so for that delay payment, there'll be penalty. So from 1st of Feb, that's why it's from 1st of Feb 2022 to 30th June. Okay, he's making a balance on this on 30th June 2022. So how many months? Full of February, March, April, May and June. 5 months. Okay, 5 months out of 12. Okay, on this 1,200 into what percentage? What would be the percentage? It is given here. Tax table 2.75%. 2.75%. Underpaid tax. So underpaid means you paid less. You didn't pay. Overpaid means you have paid more than the amount, so you'll be getting a return on that. Okay, it will be 2.75. So it will be 2.75. Let us take the calculator. Okay, so it will be 1,200 multiplied by 5 months. 5 divided by 12. Okay, this you can even put in the bracket. Better to put in the bracket. Okay, Okay, so it's understood. 5 over 12 into, okay, again multiply by what rate? 2.75%. So it will be 0.0275, which will be equal to 13.75. So 13.75 means 14, right? Interest. This is an interest we are calculating. Okay, 13.75 means. So don't break your head that why didn't I get 14 or 33. You will not get exact figure because 2.75%, right? So it shows that, look at the percentage. The interest rate is 2.75%. So you will not get an accurate answer. Okay, so it's 14. Penalty. So how much is the penalty? A penalty will be, first of all, you have to decide whether a penalty will be imposed also or not. Sometimes penalty is not imposed even if you are late. It depends how much you are late. Okay, by how many days. A penalty will be imposed since more than 30 days late. If you are more than 30 days late, only penalty will be imposed. How much? 5% on that amount. 5% on which amount? 1200. So 5,000 on 5% on 1200 is 60. Okay, let us go to the table to see the penalty. Okay, so this is in the tax behavior. They didn't give the number of days. Okay, so penalty will be imposed 5% first. Okay, later there are more penalties. Okay, if you are paying more late more than 60 days or 3 months, there's a table like that which you have to memorize. Okay, next. Oblong Limited has had the following results. So you have the trading profit and loss. You can see loss. Okay, and property business income and qualifying charitable donations. If Oblong Limited makes a claim to relieve its trading losses of 102,800, which is this one, for the year ended against total profit for the year ended 31st March 2020. Here he was making a profit. How much of this loss will remain unrelieved? Okay. So again, so first 102,800. Okay, from here you can utilize how much? First we are going to utilize it again property business income in the current year. Okay, whenever you have to utilize it again the current year when there's a loss, whatever the other incomes are there, not trading income, other income are there, first utilize it again. So okay, according to the rule we go by that. First we utilize it again current income, then we go to the previous year. So we have a property business income of 10,100. First we are going to utilize this 102,800 with this. Okay, then we are going to go to the last year and take this one 79,400, and also we are taking the property business income also from the last year because we can utilize again the last year's property business income. There are rules and regulations. Okay, there are so many rules. Again, what you can utilize, how many years back you can go, what are the things when you are taking back, with what you can utilize, and currently all these are rules. Okay, so you have to learn for that. And when you utilize, so basically this and this 3 you are taking against this. Okay, after you deduct this 3 from 102,800, the balance which is left, that means you cannot utilize it, is unrelieved. You couldn't relieve it against any other income, which is 6,500. Yes, 6,500. Next, putting an asset into a joint names with a spouse for a partner or in a registered civil partnership prior to the asset's disposal can be sensible capital gain tax planning. Which of the following cannot be achieved as a direct result of using this type of tax planning? Okay, so you have to select what are this: making the best use of annual exempt amounts, deferring the CGT due date, reducing the amount of CGT payable, making the best use of capital losses. Which of the following cannot be achieved as a direct result of using this type of tax planning? What was the tax planning? Putting an asset in the joint name with a spouse before the asset disposal can be sensible to capital gain tax planning. Okay, so it is deferring the CGT due date. You cannot defer it, you cannot delay the date. Why? Because the corporate gain tax due date will be same whether the asset is split between the spouses or not. Okay, if the asset is with you, still the date will be same. If asset is between the spouses you have divided, still it will be the same. The date you cannot defer it. And EVA's income tax. So you will be asked a lot of types. Okay, income tax, VAT, corporation tax, inheritance tax, capital gain tax. From so many different areas you will be asked on section A and section B. Okay, even section C, but section C there is a limited area that could be asked from you. But mostly section A and B, yes, because it's MCQ, so anything could be asked. EVA's income tax liability and class for NIC for the tax year was this. Her income tax liability and class for NIC for this year is this much. What is the lowest amount to which Eva could make a claim to reduce each of her payments on account for the tax year without being charged interest? Payment on account, okay? For 2020-21. So, it is, what is it? Just look at this. 4840, okay? Divide by 2. So it will be 2420. Why 2? Why is it 2? You're making 2 payment on accounts, right? So what is the lowest amount of which Eva could make a claim to reduce each of her payments on account for the tax year without being charged interest? Okay. Next. So next is section B. With that, we have finished section A questions. And here one thing is important. Section B, calculation and workings need to be to the nearest pound, and also apportionment should be made to the nearest month. Okay. Sometimes what happens is 5 months, 3 days. So we don't take that 3 days and all. We take it as 5 months only. If it's 5 months, 15 days, we still take it as 5 months. So we just round up to the nearest month. Okay. And even the calculation and working to the nearest pound. So section B question, I'm not going to do it in this video. It will be in part 2. Part 2 is for section B only. Okay. But you can just have a look around how it looks like. You will be given a case study on the left hand side. This is for all the F5 to F9 papers. Same. Pattern is same. And you'll be selecting answers. How you have done for section A. Okay. So with this, I end the video here and hope to see you in part 2 of the video. And don't forget to subscribe to my channel and take care.